Welcome back to my channel. So guys, today I've got an amazing boom and crash strategy. Okay, what is this strategy about? Okay, let's get into this. So this is the strategy. So okay, this is a boom and crash strategy. I call it the death cross strategy. Okay, so with this strategy, the time frame that you're gonna use for this strategy, it's 1 minute. It's a 1 minute time frame. My strategy that we are going to be looking at, and with this strategy, these are the indicators that we're gonna be using. We're gonna be using the 50 exponential moving average, and I'm gonna select the color blue and the 200 exponential moving average, and I'm gonna use the color red. So the 50 is for the blue color and the 200 is for the red color. So what are the conditions that you need for this strategy? The condition for a buy, you buy when the 50 exponential moving average crosses above the 200 exponential moving average. You buy when the 50 EMA crosses above the 200 EMA. As simple as that. So when do you exit? You exit when when the 50 crosses below the 200 exponential moving average. I'll explain in details how you can place your stop loss, when do you exit, and I'll clearly show you what do I mean by this statement. I'll show you the meaning of this statement. Then you sell when the 50 exponential moving average crosses below the 200 exponential moving average, and you exit the trade when the 50 exponential moving average crosses above the 200 exponential moving average. That's how simple the strategy is. So let me explain what do I mean with this information. So let's go to the charts and see what exactly do I mean. So with this strategy, this is what I mean with this strategy. So the blue line, this one is my 50 exponential moving average. Let me give you the parameters. So the 50 exponential moving average, so the period will be 50. The method is gonna be exponential. You click here. So for those who will be using a phone, it's gonna be slightly different, but the parameters are still the same. So with so the method is 50, shift 0, apply to close, then the color is blue. This is your 50 exponential moving average. Then you have the red line, which is our 200 exponential moving average. The period is gonna be 200, shift 0, method is gonna be exponential, then apply to close, then my star is gonna be red. So with this strategy, the condition, when do you buy, when do you sell? When do you buy, when do you sell? Okay, I have a good example. I've highlighted the places where there was this intersection. So I'm gonna give this as an example for a buy condition. So for your buy, like what I explained, the blue line has to cross above. It crosses above. So on this section, we have the blue line crossing above the 200, which is the red line. The blue line crossing above here, you can see, that's when you buy. So where do you place your stop loss? You place your stop loss, you stay in the trade. Okay, you stay in the trade as long as the blue line is above the what? The red line. You don't exit the trade. So when you buy, so at this point we can see that at this point that's where we have our crossing, somewhere here. and we're going to remain in this trade. So we'll place our buy here. Then our stop loss was going to be below the 200. It was going to be below the 200 exponential moving average. That's where you're going to place your stop loss. Then you stay in the trade until the blue line again crosses below the 200. That's your buy. Your stop loss one is below the 200, which is the red line, and you're going to stay in the trade until the blue line crosses below. Here we can see now this is where we have our exit. So for our buy condition, we now have where we place our stop loss, our exit. So basically that's it. That's how simple this strategy is. You can see how many pips you're going to get. You're going to be in this trade up to this point. You're going to gain a lot of pips. That's a lot. Just look at these pips. Just look at this pips. That's when you exit. Okay, so that's it for the buy. Here we have another buy condition. So your stop loss will be below the what? The 200 exponential moving average. And here we have a crossing. You can see the blue line was crossing above here at this point. It was crossing above the 200. So that's where you place your buy. Your stop loss is below the 200. It's below the 200. You place your stop loss published. You place it here below the what? The 200. And then you're going to remain in the trade until the blue line, which is our 50 exponential moving average, crosses below. So you exit here. You see? That's how simple this strategy is. Look at the pips. You're going to be in huge profit. So that's how simple this strategy is. This strategy works perfectly, especially when the market is trending. When the market is ranging, it doesn't work that much. When the market is ranging, it's not that effective. But when the market is trending, it works perfectly. So you can see these are all good examples of a buy. You can see the market will move up. Okay, let's look for an example where we have a sell. So I'm giving examples in boom. I'll go and look for an example in crash. So with the sell here, you're going to place your sell here when the blue line crosses below the what? The 50. That's where you place your stop, your sell. You're going to sell at this point. This is the point that you're going to sell here when there is a crossing. And then you remain in the trade up to this point. You'll be in the trade when it crosses above here. So this is the point. This is the part where you're supposed to sell. This is a good example for a sell. So you're going to exit the trade here when the 50 now crosses above the 200. That's how simple this strategy is. So your stop loss, you place it above. You place your stop loss above. Let's just say 10 candles. 5 to 10 candles above the what? The 200 exponential moving average. That's where you place your stop loss. So you're going to ride this trade up to the point where now the 50 is now crossing above. It's a crossover strategy. It's now crossing above the what? The 200. That's where you exit the trade. Here again, we can see that the 200 here crossed below the 200, and you're going to here at this point we have a crossing where the 200 the 50 crossed below the 200. We are going to sell up to this point where now the 50 exponential moving average is crossing above the what? The 200. That's when you exit. So you can exit at the same time. When you exit, you then place your buy, because now it's in now a good condition, a perfect time to place your buy. So you can trade like that as long as the market is trending. As long as the market is trending, you'll be able to buy and sell in boom. That's how simple this strategy is. That's how simple this strategy is. You can see here we have the 50 crossing below the 200 and it went down up to this point. That's where you're supposed to exit the sell. We have a lot of these examples. You see, that's how simple this strategy is. It's very, very simple. You can see. Okay, let's look at an example in crash. Okay, so in crash, let me put the parameters. So I said we're going to have 2 moving average. So we have here the 200 period 200, the 200 exponential moving average. That's the red line. Then we're also going to place the 50 exponential moving average, which will be the blue line. Then that's it. So here we have a good example of a good buy. We can all see that at this point, the 50 crosses below the what? The 200. It's a perfect time for you to start catching spikes. So in crash, you can use it to catch spikes and also to trade ticks. You can also buy in crash. So here at this point, we can see that the 50 exponential moving average crossed below the 200. This is a perfect time where you sell. You sell at this point and you only close your trade when now the 50 crosses above the 200. Then you close your trade. Are we together? Then let's look for another example. You can see here we have another example again. The 50 crosses below the 200 and here you're going to exit. These are all good examples. Let's look for examples where we can buy. Okay, so we're going to buy at this point. This is a perfect example. We're going to buy at this point when the 50 crosses above the 200. This point. This is the point where we're going to enter. So on this point, let me try to highlight it. Let me try to highlight that part. Also, so we're going to enter the trade here. This is the point where we're going to enter here when the 50 crosses above the 200. And we're going to remain in the trade as long as the 50 is above the 200. We can see here there was this spike and it was able to cross below the what? The 200. That's why I said your stop loss has to be 5 or 10 candles below the 50, below the 200 what? Exponential moving average. So you can see at this point it was still, this spike didn't hit our stop loss, so we're still going to remain in the trade. And again, we'll remain in the trade as long as the 50 is above the 200. So here eventually the market was able to go up, and we don't exit the market. We keep on riding the trend. We only exit the trade now at this point when now the 50 is now crossing below the 200. So at this point, that's where we're now going to have our exit. That's the point where we are going to have our exit. This is the point. So this strategy works. You can do a back test to see how powerful this strategy is. So in a trending market, you'll be able to be very, very profitable. It doesn't only work when the market is ranging. So we can see this is our entry. This is what's going to be our exit. Just look at the pips that you're going to gain. Are we together? This strategy is amazing. This strategy is amazing. Okay, here we have an entry here. We're going to enter this trade at this point. We will enter at this point and then we'll ride the trend up to this point when the 50 crosses below the 200. That's how simple this strategy is. We can go on, and we will see how powerful this strategy is. So this strategy works in boom 1000, boom 500, boom 300, and also crash 1000, crash 500, and also crash 1500 and 300. This strategy works in that. This is the simplest method that you can use to trade boom and crash. This method can also work in volatility. This method can also work in volatility. Let's look at volatility 75. Let me put the it can also work in volatility 75. You can also use this simple strategy to trade volatility 75. Okay, let me show you how. It can also work in volatility, where you're just observing these crossings, and you'll be able to take your trades based on that. Okay, let's look for examples. So here we can see that at this point the market was able to, the 50 exponential moving average crossed at this point. At this point, that's where you have your entry, and your stop loss will be below. You can count maybe 5 or 10 candles. Probably your stop loss is here, your entry is somewhere there. Okay, your stop loss will be somewhere here, so your entry is somewhere here, and then you remain in the trend, as long as the 50 exponential is above the 200. You only exit at this point, so you're going to enter here and exit at this point. So this strategy can also work in volatility. You can use it for 1 minute. It's a 1 minute strategy. So this is how your trade is going to be. You can see that you're going to be very profitable. So it can also work in volatility. Here we have a good example of a buy. The market went up and then it came down at this point, and here there's a very good example of a sell. You can see the market was going down and you're going to exit at this point. The same applies here. The market crossed above here and was able to go up there. So this strategy works. Okay, so this strategy works perfectly. It works perfectly in boom and crash. You can also use it in volatility, but you have to know if the market is trending. So if the market is trending, so if it's in an uptrend, there will be high highs and high lows. If it's in a downtrend, there will be low highs and low lows. So you have to know if the market is trending. That is very important. I will also make a video on how to check if the market is trending and what are the possible signs that indicate that there is a possibility that the market is now reversing. I will also work on price action, because all these strategies, they work perfectly if you have a better understanding of price action, candlestick patterns, price action. I think this information is very important. It will improve the quality of the results that you're gonna get when you're trading. So that's it for today. If you haven't subscribed to my channel, please do so. Subscribe to my channel, share and like this video so that we can reach a lot of people. Thank you so much for your time. May God bless you. Bye bye.